and welcome to the trading week right before the Christmas time. Right here in Lagos, another trading day. It's great to have you join us. Let's get to the top stories that set to in Jeddah. Today, we're expecting inflation numbers. That's for November. The National Bureau of Statistics is supposed to send us that report today. Meanwhile, think tank Financial Derivatives Company is projecting headline inflation to increase by about 0.76% to 34.64%. FDC attributes this increase to seasonal factors and cost pressures, resulting in higher prices compared to the corresponding period in 2023. On its part, the EIU forecasts inflation will peak at 35% in December 2024 and average about 27.7% in 2025. A disinflationary trend is expected in the long term, supported by forex stability, trade policy, and base effects. All right, let's get a check on the Naira now. We see it depreciated by about 2 Naira. 5 kobo, that was for the last trading day, Friday, 1,514 Naira. That level still maintained. NAFEX window, 1,549 Naira, also down 0.13% on Friday. So that big week, the week before last week, we did get a bullish move there from the Naira, but we're still seeing that range play out so far. And talking about the Naira, organized private sector is asking the Central Bank of Nigeria to address the cash scarcity witnessed nationwide, stressing that the country is not developed enough for cashless transactions. Members of the organized private sector pointed out that the scarcity of cash has adversely affected businesses, especially those in the micro, small, and medium enterprises category, as they express fears of an imminent collapse of MSMEs. The body notes that a significant portion of the population still relies heavily on cash for daily transactions. That brings us to our first conversation now. Joining us is Mukhtar Mohammed. He's the CEO of Finance with Mukhtar. Great to have you on the show.
Thank you, Ladi. Good morning.
Yeah, morning. So it's like deja vu here again. We're seeing cash is scarce. We're seeing the ATMs are dusty. How are you seeing this new trend?
Well, I think it's not good for our economy. Like I always say, Ladi, the most vibrant sector in the Nigerian economy is the SME sector, and that sector is largely driven by cash. And that is why you've seen that the CBN policy have not really hit the ground running, because the most vibrant sector, 80% of Nigerian business in the informal sector, which you know that is the key employer of labor in Nigeria, especially in the rural area. I totally agree with the Manufacturer Association of Nigeria that it says that it's not yet time for us to just go in fully into cashless. I think we've tried. Most businesses are trying to go cashless thanks to the fintech companies also. But again, we have this infrastructural challenge that I always keep saying about, that the CBN have not even been addressed like it's done in developed nations. When you have common, they share common infrastructure that is there through the help of CBN, maybe coming in, partnering with the bank to bring a strong backbone, especially at the back end. So we are not seeing this, and again, we are seeing that the CBN is so rigid in their cashless policy. Forget about the statement they say openly. You and I know that this current trend of scarcity of cash is largely driven by CBN policy of trying to reduce liquidity to deal with inflation. And it's comical because, again, you see the CBN say we have about 4.something trillion in circulation, and yet where is this money? So I think, and again, they have come out to say this money is not largely with the VIPs, and I think the CBN really need to come hard on the banks, any bank that is fine completely.
Right, and talking about the banks at this point, what would you say, are the consequences at this time? We've heard the CBN issue, warnings at this point, saying that any bank found culpable, also for hawking, the Naira, selling the Naira to most of these hawkers so that you can get all those clean notes at parties. The central bank is saying they'll fine the banks 150 million. So as it looks now, it's mostly looking like the banks are the ones here keeping the cash from us, going by what the CBN is saying.
I think the CBN like passing the buck always to the bank. That's the truth. They like passing the buck to the bank because the bank seems to be the one that is really available for us to hit on. Ladi, he said Nigeria is not the ball of law. The Economic and Financial Crimes Commission said they're going to crack down on abuse of Naira. And we have seen that over the time of some ways. I think some months ago, we saw how people were sent to jail for abusing the Naira. We saw how people did out of settlement of court to abuse the Naira. At that time, it was high, and it's like, well, finally, people were scared of even spraying Naira notes in parties. But those mint notes were still in the parties, but they were being done secretly. But after some time, we are back to where we used to be. You see this mint note all over parties again, and there's no any law enforcement agency. I don't think it's in the place of the bank to begin to go after, or the or the central bank to begin to go after those with mint notes in the party. I think the security agent need to do their own work, especially the Economic and Financial Crime Commission. It's not just for you to go after high-level people, and then you have to do it with everybody. The law must be applicable to everybody. Nobody's above the law. It seems that you target some people and you go after them. No. I think for me, when it comes to implementation, I think the security agents, they have the law. They are the ones to arrest. The CBN does not have power to arrest. The bank does not have power to arrest. The CBN is saying it's going to fine the bank 150 million. But again, you ask yourself, if I come to a bank as a customer and I'm fortunate to be giving new mint note because of my relationship with the banks, does that mean that the bank should be culpable if I decide to go and give it to people in parties? I think this is an issue that has to do with strictly the security agency, and I think the security agency should come on this.
Right, and I guess, Mukhtar, this is a good excuse for me not to have to spray money. When I go to some of these parties, I say it's against the law. At this point, I'm not spraying. But, we've seen, most of these banks, declare bumper profits so far. So I'm wondering, is it on the back of, selling the Naira, or commodification of the Naira, by selling it to hawkers and also POS agents? This is why we see the banks having all that bumper profit.
No, Ladi, no. How much of these Naira notes are outside and how much of these Naira notes selling down out to the bottom lines of the bank? I don't think so. If you look at the bank profit, it's largely driven by a lot of things they've done. You see in the area in terms of trading, you see the banks in terms of giving out of loans. I think the bank profit, if you look at their balance sheet and you look at the result that have come out, was largely driven by their core indices. So I don't think those Naira notes you see outside had any role in playing in terms of making the banks profitable. I think this is largely profitable for individuals. I think so. It's largely profitable for individuals. And if you look at the bank results, you realize that they got a lot of profit through the non-income sector, that is in terms of transfer. So it is better for them to even put more emphasis on cashless than even doing giving out the physical note. For the physical note, I think it's majorly beneficiary to those bank staff that are involved in it, not necessarily to the bank.
Right, but I guess at the end of the day, the banks smile to the bank, regardless. But it seems this is a plus for the fintechs, more transactions for them.
I tell you the truth, it's the fintechs that really helped the rural banks, rural area. I think there seems to be those that are in line with the traders. They go right there and meet the traders in the market. Sometimes you go to the market now, there's a particular fintech company that seems to be the toast of every small business owner, or especially the informal sector. You have to give it to them. But again, that is why they were established, and that's why the POS terminals also were established. The difference between the fintech companies and the POS terminals, that the fintech companies are easily monitored by the CBN. CBN are able to monitor, put check and balances. Remember, some months ago, those companies were suspended. A lot of accounts were suspended. They did verification. They have to come back, re-verify them before they were back on that platform. So you see that the CBN is doing strict monitoring. But for the POS, I think the CBN have not been strict with their monitoring. You must know why the PBS came into this system just to manage little transaction, 5,000, 20,000. They were not supposed to do more than 100,000. I don't even think it's up to 100,000. But now you see that the POS, when you look at security agent coming after some POS operator, they've done transaction up to 6 million, giving cash up to 5 million, 500,000, 1 million. That's not what they were meant to do. I think the CBN also need to improve their regulatory of those POS operators. I think in terms of the POS operation, regulation is lacking. For the POS terminal, the fintech company, I think they have done very, very well. kudos to them. They have really brought those financial inclusion, especially to business owners, small business owners. But they need to build the infrastructure so that they can penetrate deep into the rural areas.
Right, and sometimes I kind of admire the courage some of these POS operators have. I was driving past Lekki Phase 1 at some point, and I saw one of them just holding the cash. She was just holding it in her hand there, not afraid, right there in public. But, going by what is happening right now, what are you expecting for transactions, in this Yuletide season?
It's going to be tough, lad. It's going to be tough. I just pray we don't get to the situation we got some months ago with the last CBN management where they caused cash crunch and a lot, especially the POS terminals, were taking advantage of individuals. I think the CBN need to act fast because this is largely a period that is largely driven by cash, either in giving of cash or in transaction by cash. It's not a good time for the average Nigerian this festivity period because they strive on cash. The security man wants people to just give him cash. I'm not talking about security men as far as the policemen. I'm talking about if you have security guards, they are looking for cash. If you have laborers, people that work in, they want cash. They don't want this money transacted into their account. They just want to use it and buy something for the festivity period. And those constitute over 150 million Nigerians. And if you look at that and by the informal sector, it's not going to be a good Christmas for them. I think the CBN have to come in fast and make sure they address this cash scarcity, especially because of the common man that depend on cash during this festivity period. Traveling from Lagos to their rural areas, most of these road transport operators do not have POS for them to transit. They tell you they want their cash because when they get to one rural area to purchase PMS, they don't do transaction. And again, the confidence in terms of transaction is still very, very low, especially when you look at failed transaction, delivery or not delivery. So all these are challenges that the CBN have not really come out to partner. I think that is what they should be doing before they fully say, look, you must begin to implement cashless. So it's really a tough time. I strongly believe that the CBN will definitely step in and bring sanity to this issue.
All right, hopefully. But let's pivot now. What are you expecting for the markets this week? That's the stock market. We know it was a positive week, a positive outing last week. So this is the week before Christmas. What are you seeing?
Laddie, Santa came to the market very early last year. Normally, this is when we see Santa, but Santa came to the market early, and hopefully Santa will be in the market. Normally, this is a time that you see a little bit of turnaround in the market because whatever retail investor, whatever they need for the festivity period, they've already taken it out in the first and second week of December. And so January is beginning to experience some bullish runs in the market. So, but like I say, Santa came early. Hopefully, Santa will still remember. One thing I'm certain is going to be an interesting 2025 for the market. A lot of things are going to happen, and I think we'll start seeing that plan out towards the last week of the month of December and the last week of the year. For this week, I'm not so optimistic, and like I said, Santa came early. Ordinarily, I should be optimistic now. But again, you never can tell. Is the stock market, since Santa came early, hopefully Santa will be there till the end of the year. And if Santa is in the market till the end of the year, then you are going to really see a very bullish first quarter of 2025. Because remember, that's the quarter why the earnings seasons are coming, why the dividend payment for virtually over 90% of the companies that are listed in the exchange. So, Laddie, I think Santa came early, and hopefully Santa will still be there till the close of the year.
Yeah, we'll definitely watch out for that. And talking about Santa coming early, looks like it's early on a particular stock, Golden Guinea Breweries. That's up about 40% last week. It was also up the previous week. What's happening?
I think, Laddie, I try to find out what is happening, but I just think it's a bandwagon effect. We are looking at a sector that is largely driven by Nigerian brewery, largely driven by Guinness. We have not gotten any market information that what is moving Golden Guinness at the moment, because again, if you look at the numbers that have been coming out from that stock, it's not that it's very, very impressive. But I think investors are beginning to look at the penny nature of that stock, especially going through the festivity period when you see those volume price going. And I think it's a very volatile stock. But then it's a stock for investors that are risk takers are putting their finger. But if you look at the fundamentals, you are not so much knowing, you don't see so much there. and you don't know what is driving it. But like the market begin to unfold, but I think it has an issue to do with the pricing nature, the premise nature of that stock. Nigerian Brewery just listing, they just get approval to list their right issue allotment. So definitely, and then most investors are beginning to look at that sector. And again, Ladi, it's festivity period. That could just be the game changer for Golden Guinness.
Right. I guess people might be expected to drink more this period. Thank you so much, Mukhtar Mohammed, CEO, Finance with Mukhtar. Thank you.
Thank you for having me, Ladi.
All right, we'll take a break now. When we come back, we head straight to the oil and gas industry. That's the moment. Do stay with us. Welcome back. Well, let's get a check on the oil market now. We see oil futures ease from their highest levels in weeks as traders they're taking profit while waiting for a meeting of Federal Reserve later this week for indication of further rate cuts. Falls were limited, however, by concerns of supply disruptions in the event of more U.S. sanctions on major suppliers, Russia and Iran. Brent crude futures, that was down about 0.3%, $74.28 a barrel. WTI still manages to stay above that $70 psychological level, also down 0.4% in early Asian trade today. The Fed is expected to cut rates by a quarter of a percentage point at its December 17th to 18th meeting, which will also provide an updated outlook on how much further Fed officials think they will reduce rates in 2025 and perhaps in 2026. All right, we're going to join a live coverage now. That's for our viewers on DSTV. That's the Adamawa State 2025 budget presentation. But this goes on other platforms. All right, to other matters now. Dangote refinery has exported premium motor spirit to other African countries, including Angola, Ghana, South Africa, in the past few weeks. The vice president of the oil and gas Dangote Industries Limited, Devakuma Edwin, discloses while playing host to a delegation from Japanese business community in Nigeria, led by Japan's ambassador designate to Nigeria, Suzuki Hideo. The company's spokesman, Anthony Chejina, confirmed this, says that products from the refinery meet international standards already being exported globally. He also reiterates that the company's diesel has gone all over the world, and jet fuel is being heavily exported to European markets. Well, joining us now is Mr. Jide Pratt, Chief Operating Officer and Country Manager of Trade Grid. Great to have you on the show. Good morning.
Hey, good morning, Ladi. How are you?
I'm fine. So I guess this is the moment, we've been waiting for, saying that Nigeria should refine its own products and, by extension, export refined products. Talk to me about the implications of the Dangote refinery exporting, to these other African countries at this time. Is this the moment we've all been waiting for?
Okay, so first and foremost, compliment of the season, Ladi.
Compliment.
I think it's extremely important to note this. We saw this coming. You don't build a single train refinery, which is the largest in the world, with a high Nelson complexity index, and then not sell to the world. It doesn't make sense. What the Dangote refinery has been able to do is that, obviously, as they keep on ramping up production and capacity, we're going to get to a stage where the products that they refine won't be, let me say, in excess supply to Nigeria. So what do? You begin to foray into markets, first within the West African sub-region, sub-Saharan Africa, and this has started. Let's also remember that they've been selling jet fuel for quite a while into Europe through companies like Vitol and Trafigura. It's a good thing for Nigeria. It's a great thing for the refinery. So Cameroon is off the list now, Angola, Ghana, and South Africa. And I do hope they can sustain this over a long period of time. But a major plus for the refinery and, I dare say, for Nigeria as well.
Quality standards and certifications that ensure, the exported PMS meets, international requirements. Break it down for us. What exactly do they look out for?
So what it is, you remember when the refinery started, there was a statement around the fact that Euro V standards is where they had gotten to. Now, what this means is that ideally, if you have a refinery and the best grade in terms of certification is what we call UOV, if you can get that, then what it means is that anybody looking for quality, you're the first right of refusal, in my opinion. They've been able to achieve that. A lot of, let me say, brouhaha when they started around the quality, that has been proven otherwise. So it does mean that if I'm looking for quality, if I'm within the African sub-region in terms of freight, it makes sense to be able to shorten my turnaround. Go where the quality is best. Price is a different conversation. Go where the freight advantage is a positive in my in my advantage as well. I take that off as well. So we're seeing more and more as the quality is becoming better and better and better. If you do compare to where you were getting before and the quality standards are much better, then that's where you would go. If the freight turnaround time again is shorter, that is where you would go. So what we see now is that countries within Africa are looking for where they can get sustainable supply over a period of time, high quality grades. If you drove into some stations in, let's say, places like Ghana, you'd see that they have what you call leaded, premium unleaded. So they have different grades in terms of quality. These are things that help Africa coming out of that refinery, and I think that's what a lot of people are looking for.
Right, and looking at most of these African countries, when you compare their PMS price per liter with that of Nigeria, we see some of them are mostly more expensive. What do you think this does for pricing, in these African countries?
So it's two things. Don't forget, we've talked about freight very, very quickly. If the freight distance is actually shorter, then you're at an advantage in these other African countries in terms of better pricing. Let's not also forget that the deeper your draft is, so every time you can bring in a larger vessel, you have more efficiencies. Most of these African countries do not have a large draft or a deep draft. So they have to try and, let me say, multiple handling. So you move from a big vessel to a small vessel to a smaller vessel, just to be able to come into your draft. When this happens, you're handling so many different charges, and that is what lifts most of the prices across West Africa. What this does for the Dangote refinery and for them is that the first things first, it reduces distance in terms of freight. Imagine coming in from Europe on a large vessel, getting to Africa, doing an STS offshore Lomé, going in with a smaller vessel into your location. Some of these depots are also so small that they can't take a full cargo. So it's now a case of discharge into tank. If you discharge into tank, you wait till the tank is full, move into another tank. Buying from the refinery is two things. And again, I must re-emphasize freight. Once the freight advantage is there, they might also be able to take in smaller vessels into just offshore the refinery and then go straight into their channels. So it does help them. But I think one thing we must also say is that what does this do for Nigeria? We used to be a net importer for so long. So begin to look at the balance of payments. The refinery is earning US dollars. While she has some foreign debts to pay in terms of US dollars, don't forget that she's also going to process some of these transactions through her local banks. So it does mean that that paucity of FX is also something that begins to fade. The more transactions they do, the more US dollar transactions they do and export, then technically more inflows for Nigeria.
Right, and looking at the whole pricing drama in Nigeria for PMS, is there a risk that prices might stay? These countries importing Dangote's fuel might actually ability to sell cheaper. Is there a risk with that?
I'm not so sure it's a risk. I think it's more of a balance. So look at it this way. If the Dangote refinery decides that I want to sell X amount of PMS, this is my X refinery cost. If they sell that product, it should go to say that the closest place is Nigeria. So back to this freight we're talking about, the same way the freight advantage should work for a country in West Africa that used to buy from Europe, is the same way that freight advantage ideally should work for Nigerian coastal waters. So it should suffice to say that if I'm going to Calabar, if I'm going to Port Harcourt from Ekpe, efficiency-wise, than going into Ghana, because that's the farther distance. So I don't think it's a risk. I think it's more of a balance, deciding what they want to do. And then it becomes very, very clear that the market becomes Lomé. So they look at what is happening around Lomé, which used to be the hub of most of the West African trades. It's basically moving to places like Ekpe. If you hear things like Gonvo is able to shut down a refinery because they're no longer profitable, it does mean it's not a risk again, Ladi, but it's a balance. It should always be cheaper, freight advantage wise, to be able to sell to proximities closer to you than chartering a vessel to go outside. So I don't think it will be a risk.
Well, as long as I pay cheaper than most of these other countries for PMS, I'll be okay with that. But what are the potential, political implications of Nigeria becoming a major fuel exporter in the region?
Again, Ladi, who should become a major fuel exporter?
That's Nigeria. Major fuel exporter. What was the implication?
Without a doubt, Ladi. I mean, back to what we're saying, the refinery 1,000 barrels a day. She hasn't hit full capacity. What a refinery would always do is that refinery, will, as long as she has crude, will always process, pack into distillates. And of course, we're going to become a net exporter. If they don't get crude locally, they'll to bring in crude and then also have them. Yes, we will become a net exporter.
All right, fantastic. Looking out for that. Thank you so much. That was Jide Pratt, Chief Operating Officer, Country Manager of Trade Grid. I call him JP. Thank you so much.
Thanks, Ladi. Cheers.
All right. So, the markets are open right now, right here in Lagos, Nigeria. We'll give you the sun by 1 p.m. But that's it for me on Business Morning. Thank you for watching. I'm Ladi Williams. I hand things back to the Sunrise Daily team.